Hey traders, it's Hima here, and I've got a chart of the week looking at the VIX. Today is Friday, June 12, 2020. Before we take a look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So here we have the daily chart of the VIX, the CBOE Volatility Index. And in the past couple days, it kind of snuck up higher if you weren't paying attention to it. If you were keeping an eye on it, you might have noticed a few things. Number one was that the actual plot of the VIX versus the RSI power zones was showing a disconnect between price and momentum. The first clue that the move lower that had been in place on the VIX since mid-May was perhaps running out of steam. Also notice with price, the VIX itself, that it had come back to the gap from February 24th, late February, and this corresponds to gaps down in many of the broad market averages and related futures. So with the action that's unfolded, where do we go next? Well, what's really interesting is that yesterday's price action came up and not only took out the May 14th high on a close basis, but it also took out the 25% retracement of the entire down move since the March high in the VIX. So this is a great example of two different sources of resistance or potential ceiling, an area of supply, coming together and producing the same result. So the retracement is 39.02 and the actual high is 39.28. So the fact that the VIX closed above those is not a good sign for the broad markets, a strong sign for the VIX. Now, what's ahead, there's a couple of factors that I think you need to monitor. To start is the next key daily range on the VIX, which is back from April 21st. Look at the low, the middle, and the high. Any one of those could end up being a useful resistance point. Will it stop the VIX from surging higher? Not necessarily. But if the VIX is going to start to peter out and roll over, then I think it would be at one of those levels if it continues higher from today's trading. This is also because when you look at the RSI power zones, they've come back to the bear resistance power zone, sort of spiked up, and they've come back to old levels, which compare to a signal that I teach in the 4 zones RSI coverage system. So it's not yet confirmed that the VIX is going to stop where it is and roll over, such that the market could resume higher, but it is at an inflection point for that to happen. So the two things I just walked through are a little bit conflicting, right? We had a close above key levels, but then we're kind of hanging out just below key resistance. This is where looking at support is really important. So I'm looking at the midpoint of yesterday's range, and we're just meandering around it. So where the Friday, June 12th session closes compared to 36.04 in the VIX, I think is vitally important. If 36.04 does not hold and today's session closes below that level, then I think there's a chance for further short-term downside on the VIX and a recovery in the market that might be a little bit more substantial, bringing us back on the VIX toward the old high from June 1st, which if you see is close to the low from June 11th. We've got 30.60 versus 29.49. But if 36.04 holds and we stay closed above that for Friday, then I would be very careful to monitor the next few sessions to see if a climb on the VIX does continue, again back towards that key April 21st range, monitoring the low, the high, and the middle of it. So we're at an important inflection point in the market, important to keep an eye on the upside and downside price levels for next steps, along with momentum and timing. Of course, my trifecta coming all together. So keep an eye on those factors, and I'll catch you next time. You can sign up at himareddy.com/gift to get my hot, timely, actionable updates as soon as I publish right to your inbox.